Thursday evening, the 12th of February, 2009. Brian Shannon here from alphatrends.net. Let's go ahead and take a look at these stocks we've been talking about. QLogic we'll start out with. We had initially gotten short over in here. We've been ratcheting our stop down and had it at 1087. I think that you don't want to give this one too much more room. It got, I'd say, about $10.62, 63 cents. Seems to me as though it's played itself out on the downside with this big volume in here. One thing you want to consider during the day is when it gets down to what's known as S2. When it gets down to S2, and again, look at Google for more information on those pivots. A lot of times that's a great place to cover, and you can see how it tagged it right in here today. And I had suggested a few times that last week that I think JP Morgan, when it dropped down to S2 intraday, I said, basically wanted to cover there because it was at S2. And it's not so much that S2 is a magical number, but it's where a lot of times the market does find support as people stop selling short or selling their long positions when it gets there, because they recognize it's sometimes a place that finds support. And then it's also an area where new buyers sometimes are attracted to what they perceive as bargain levels, so it ends up less supply and more demand in those areas, which leads to at least a short-term turnaround a lot of times. So I will not be updating QLogic anymore, and when I say I'm not going to update a stock anymore, that means that basically you're on your own. I've said that numerous times about certain stocks, and then people go on to say, well, what would you do with this stock? And I said, I dropped that stock 3 days ago. So if you want to follow it, that's up to you. But for me, QLogic seems like it's made its move. PSYS, we were looking to get short this stock below $27 a share, but as I always say, you don't want to sell short these gaps lower. So that trade was invalidated on the PSYS, and I think you want to kick this one off the list right now too. It seems like it's getting a little bit more difficult to make money on the short side in the individual stocks right now, and Buffalo Wild was certainly a case for that. And just when they look like they're down at the brink of destruction, a lot of times, from a failed move lower comes this fast move higher. And this stock gapped up today and closed right up on its highs, up $7.50. And this is why, if you're going to make a bet on earnings, you do it with options, because your risk is strictly limited. Had you sold short 1,000 shares, you could be out $7,500 now. The way that I did this as well, I wanted to talk for a moment about position sizing with options bets, especially when you're basically betting on an event with only a little bit of time left. That is 2 weeks till options expiration. Now 6 days now for in this case. But the point is, you only want to risk a very small amount. As I was mentioning in an email with someone who got involved in this and got hurt, what I thought was worse than I would have been comfortable with. I told him that my overall exposure was 0.1% of my equity in my account. And he was saying, well, is that going to really make a difference? Let's say you had a $200,000 account, you had $200 at risk. Well, if the stock, $200 isn't going to hurt you, but if the stock gapped, 5 points lower instead, you'd make $1,000, and you're not going to get rich on it, and that's not the point. The point is you're trying to get some good winners in here and bet on an event. And if you're right about a couple of them, then they're going to pay for the losers, and you're going to come out, maybe, you can add a 0.5% a week that way. It's a low, it's a low odds. It's not necessarily low odds if the direction is right, but obviously this one was wrong. But when they work out, you can get, like we saw with Perigo, you can get some massive percentage winners. And, one winner like this will take care of a dozen small losers. And the point is, you got to be doing, obviously, one better than 1 in a dozen, which is pretty easy to do. So keep the position size small. Don't look at these as a swing for the fence trying to get rich. Defense is always number one. Position sizing, risk management, whether you're setting stops or you have stop levels in mind. As I said yesterday in BRKR, there was an entry in here. I had suggested selling half of it here and got stopped out of the rest right there. I'd said that if you continue to hold it, you're on your own, but I would put a stop underneath here. At this point, I would say if you're in it, you're on your own, but this is where I would say the worst case stop is. I'm not going to continue to update that one. Comtel, CMTL, we were looking for this stock. We were looking to get short below yesterday's lows right in here. And this one did meet the criteria of entry. And I said, I would be very defensive and put my stop right here. So that should have been, had you gotten involved, a small loss in here. So CMTL, you can take that one off the list, basically. It's just sitting here. Doesn't really look like it's going to go either way. I'm going to actually keep this on my radar, but I'm not thrilled about it for tomorrow. Pool, we had talked about getting short this one below $16.24. So that was right here. And you can see that did that from the open. I had suggested the worst case stop was $16.55. I think maybe $16.45 in here now. You don't want to give this too much room. The stock does look like it's breaking lower, but we've seen some real strength in the market late in the afternoon. And these markets, for instance, the IYR saved, what looked like to me certain death in here when it broke below these lows in here. But, it's not what they do intraday. It's, where do they close them and how do they close them? This market had broken down below that S2 even and then just ripped higher into the afternoon. I think a lot of short sellers got squeezed in there. I don't think that this market is fixed. I think, worst, best case, we're probably back into a range for that. The retailers didn't break down below that level. I'd suggest keeping an eye on this one. Had you gotten involved, these are better day trading vehicles than anything. So it's tough to say where exactly you would have gotten involved in there. I didn't trade it. I wasn't even watching it during the day today. What I was watching more than anything was the Russell 2000. This is the one I think I've been talking about a lot more negatively. And I was expecting in the afternoon that it was really going to get smashed. In this market today, it had rallied up to the pivot, and that's also part of that pivot analysis. Made another lower high in here and then started declining. So when it started declining, got back below VWAP, and then it couldn't hold above it right in here. I got very aggressively, probably too aggressively short right in here, and covered a good portion of it right down at S2, and then the rest right here as it started moving higher. And I got some questions about why did I choose the Russell 2000? Well, the Russell 2000 trades a lot of volume. It's got great volatility, and they have these triple funds, such as the TZA. The TZA, here's how I got involved. When the IWM started breaking down, I got involved in the TZA right here. This gives you, when the Russell drops 1%, this will gain 3%. So you buy it long. And I bought a whole bunch of the TZA right in here. And this is where the S2 was. It corresponds with the IWM. So you can see it was right about $59, and it rallied up in here to about $60.50, $60.60. And that's where I'd said on Twitter, I'm selling some now. And then I said here that I'm scaling out of some more. And at this point, I said I'm out of the position. And I was, I was thinking, hey, nice trade. I made $1.50 or whatever on some real big size. I certainly wasn't expecting this type of turnaround, and as a result, I didn't participate in that. But had you gotten involved in the Russell 2000, which went from 43.60 to 45.14, you could have played it with a triple long Direxion is what these is the name of the company that does these funds, and this is the 3 times bullish levered fund. So this one went from 22.10 basically up to 24.50. So it went $2.50 here, more than about 12% in the same time that the Russell went from, what were the numbers there, 43.60 to 45.14. So the TNA, the TZA, they are only for day trading, and I posted something from the prospectus on those yesterday, and they're only for people who really have the needle deeply in their arm and who are sitting, watching tick by tick, who don't get up to go to the bathroom, especially if you're going to trade it with any position size. That's going to wrap it up for tonight. We've got a 3-day weekend coming up, and I'm not sure I'm going to be trading most of the day tomorrow, so enjoy your long weekend. Thanks.